Well, good morning, everybody, and hopefully you are ready for some pre-market rundown here. We have a lot to talk about because there's a lot going on in the markets. Obviously, we've been seeing some significant amount of volatility. So we got that to talk about, as well as some of the economics. We have to also talk about some stocks, your stocks, as well as some great setups. Hopefully everybody can hear me. This is Andrew Horowitz. Hi there, gang. I am the founder of TriggerCharts.com, where we have some great indicators that give us some real insights into the markets. And we went over a lot of those last week, if you recall. One of the things that's really interesting is that we have found that there is a significant amount of tracking of the indices with regard to our volume-based indicators. And we talked about that last week. We went over this incredible webinar about the tools that we use and that we designed for Trigger Charts. And hopefully that you can check that out when you have an opportunity or watch the replay. The replay is available as well. Let's do a quick check here. Everybody can hear me, everybody can see me, everybody can see my screen. Give me a quick check of what's going on here. And then we'll get on with this and start rocking on with what we're gonna talk about today. But we're gonna be doing this also every Friday, 9 a.m. So you can check back here. You can also see replays over on our YouTube channel for Trigger Charts, as well as you can also find us in over at TriggerCharts.com. So, great. Thank you, Sir Adam. Everybody else? Great. Okay. You can also do us a favor, and if you want to put your questions into and your stocks and your futures questions, whatever questions you may have, things that you want us to go over, do it in the Q&A, do it in the chat, and we'll get to it. Everybody ready? All right. So the first thing we need to know is that there is on our right screen here that we're looking at here, of course, there is risk in what we're talking about. This is for educational purposes only. Please do not utilize this as a recommendation of any sort, but check that disclosure right there. Some of the things that we want to talk about is clearly what's happening with markets is that trade wars are dominating. Trade wars are everything right now. We have the rhetoric that's coming out of both sides of China and the US that the deal's on, the deal's off. We have a potential framework, we have the cancellation, we have tariffs, we're going to reduce tariffs, we're going to raise tariffs, and on and on and on. The problem is that this is creating a significant amount of uncertainty for markets. And when you have uncertainty for markets, markets get a little bit crazy, get a little kinky. So that's what we've been seeing this week, where there was opportunity for an upside on in the beginning of the week, and then there was some downside towards the end. We're picking it back. Almost every day we're seeing an up and a down right now because there is no resolution in sight. It's a rather light week overall this week for economics. We saw durable goods come out this morning, came out lower than expected, dropped about 2.1%. Expectation was for about a drop of 2%. There was a ex-transports number that came out, and that was a little bit better. And some of that probably is the fact that Boeing is a big part of the transportation in the durable goods orders, and there's been a slowdown on their exports in that area. But exports is definitely slowing, inventories are definitely building, and that's creating a problem when you look at the outlook for GDP in the future. We saw that great GDP print of 3.2% in the beginning of the year, and the question is, how is that going to be revised down, and what's actually going to happen moving forward with all this inventory build that's probably going to stabilize. Next week, we have some housing coming out. Next week, we have a few things coming out. We had some housing this week also that looked a little bit better, stabilizing. But next week, we're going to be seeing a few things like the home price index. We're going to see personal income and spending. We're going to see consumer sentiment. Consumer sentiment in one of the reports this week popped back a little bit, and that looked better. But generally speaking, economics are, I would say, not soft, but they're not going anywhere. They're kind of stagnant right now. Nothing's moving very much. There's just this painstakingly slow crawl, and that is due to the fact that we're coming off a pretty good base last year. And in addition to that, there is this tariff situation and this trade war and this concern about CapEx expenditures that companies are really starting to say, you know what, we're not very clear about the future, and therefore we're not going to do anything. So they're just doing buybacks, etc. We have a second look at GDP next week as well. So the theme for this week, the horses are approaching the barn. If you have been horseback riding, you know what happens on the second half of the trip. As you start getting closer to the barn, the horses pick up a little bit. They get a little bit excited. That's because they know that you're getting off their back pretty soon, and you're going to be going to the barn where they can rest and eat their hay and just chill out for a while. And here we are coming into the end of the month, and oftentimes we see some window dressing, we see end of month movement. It's not as big as an end of quarter or an end of year movement, but we are entering the last week of May that's coming up just in a few days. So therefore, I'm expecting to see some more volatility, some window dressing, and the potential for a negative situation over the last few weeks to start to resolve, and buyers possibly step in to check their books and to paint the tape a bit. One of the other things we saw this week was the Fed. Fed came out with their policy minutes, and it looked like they're starting to come to their senses a little bit, talking about this potential for a transitory inflation situation, and moreover, trying to set the market straight in terms of how they are actually going to proceed moving forward with rates. There was a lot of excitement about the potential for a rate cut, and we had anything from a 25 basis point to a 50 basis point rate cut, that there was this assumption that was going to happen. Where is that coming from? I don't even know where that's going to come from. So when we look at the current rate environment, I would probably expect that there's going to be no rate hikes until the end of this year at the best. But I don't see any reason from anything the Fed is talking about or from what we're seeing with regard to the economics that a rate cut is even possible, especially because employment numbers are pretty strong. So animal spirits are a little bit cooling off to a degree. If we look at some of the IPOs and some of the action post-IPO on many of them, they've really come down very hard. And I think, again, reality has been hitting hard with the fact that people are wondering, why am I buying this stock? That there is such a significant loss that's going on. And is it going to get any better ever? We're all of a sudden going back to the dot-com era where companies never expected to make money and people were just happy to pour money into them, buy the stocks, bid them up. I think there's a little check going on right now, a system check, if you will, with regard to this. So I mentioned that you can, of course, sign up for the webinars over on TriggerCharts.com. So if you want to be a part of next week's, you just go back there and re-register for this, and you can get on there. Let's talk about some of the things that we're going to be talking about today. We're going to talk about, let's see, these stocks I'm going to highlight right here. Some of the earnings this week we saw was Best Buy, Deckers, Ross Store, Foot Locker, Hibbett, Sports came out today. And also we saw Lowe's, which got crushed. Home Depot did a little bit better. And the big box retailers like Dillard's and Nordstrom's really got hammered. Some of the stocks of interest we'll talk about is Tesla, of course, a lot of interest in that. Macy's, Beyond Meats. We're going to talk about, that should say JD, I believe. And we'll talk about a few other things here. And crude oil. So let's get right into that. All right, here we are. What are we looking at? We're looking at ES futures on the minis, so the S&P E-mini futures. And what we're seeing here is that there's a little bit of a bid up on this right now. Let me get the little spotlight tool going on here. This one here. No, that's not working. Everybody can see my screen right? You see this screen that we have? I don't know why that's not working. There we go. I have no idea why the spotlight tool is not working. Oh, it should be. There we go. Okay, so basically what we're seeing here is that right now, where are we? Well, we are in a situation where seeing a little bit better move on the S&P futures. And we're seeing this range, right? This is the 30-minute chart, probably the top end about 2038, which is about 3 or 4 points from here. Over on this side, we're seeing that there is support at the 2819 that we bounced off of. This is a daily chart on the right. The support levels that we're looking at here are, significantly embedded right now in the overall profile that we're seeing. We're seeing this downtrend when we look here on the right-hand side. We're seeing this downtrend that is significant with regard to this aileron indicator that we have. And basically what we're seeing here is that the momentum has been shifting dramatically since the beginning of May. So there's a little bit of a tell by markets that the momentum was shifting even before we saw the price start moving significantly. So the Qs, when we look at the Qs, there is also a level here that we want to look at. Basically, on the 30-minute chart here, we're seeing that 73.56. We're below our key areas right here. So I want to switch back to something for a second here and take a look at something. This is on the right-hand side of the screen. I want to share this with you. I think it's really interesting that what we're seeing here is that there is this Bollinger Band, which is a 20-day moving average and one standard deviation above and below. And essentially what we're looking at here is a bounce off of the S&P 500 right off the declining, and there's a definite shift of what we've seen before, but a declining 20-day moving average. So we just recently turned pretty sharply down, and we're seeing that there was support very close to the area on this. And basically, when we look at this, you see this kind of area right about here, right there. This is a new webinar program we're using, so a little bit rusty on some of the, on all this. But essentially what we're seeing is that there is this level that we are seeing a declining movement on the 20-day. Of course, the standard deviation one below is moving down as well, and what we're seeing there is a bounce off on that. Looks almost identical when it comes to the NASDAQ. But getting back here, let's take a look at the Qs. On the Qs, what we're seeing is that there is a significant amount of, let's take a look here, a significant amount of support that we saw that goes across. We always want to connect lines. Starting to roll over a little bit, but a little bit of a nice move, up 40 points on the Qs. I want to talk about crude oil for a second here, because in crude oil, when we look at that, what we're looking at is there is, once again, a significant amount of drop that happened. I think we're down 6% yesterday. That was very significant. And 6% yesterday, starting to resolve a little bit. We have what's called a hole. And let me show you that on the 30-minute chart. I think it's important to recognize this. We have this area on the 30-minute chart right there that there's a hole, and the opportunity to move back up to 60 is pretty strong. We're on the right-hand side of the chart here. We have some support, and that would probably be in the 58.5 level, somewhere about that. But when you look at this and you want to look at where we are, basically the better side is to a little bit of a movement lower right now. You need to be careful as to your trading when it comes to this area of interest. So that's important. Some of the stock, let me go back here. What else do we got going on here? Now let's talk about the dollar for a second. The dollar has been screaming higher. It can't seem to get above the level of about 98.20 or so. One of the things that we do see happening is with all the trade wars and the rhetoric with China in particular, is that we are seeing that the Chinese are dropping their value of their currency significantly. And as we see more and more going into this area of the potential for trade wars and sanctions and taxes and tariffs against China, what they're doing is simply adjusting their levels in terms of their currency to try to make up for it. It's hurting us, and that's why exports were a bit lower. Gold, is anybody interested in gold? Gold's been on a bit of a downtrend here, and when we look at this, you kind of see this kind of movement, a little bit of a channel that we're seeing there. And when you look at that, it continues to look like there is a downtrend that's very evident when it comes to gold. There is still some support here, though, if you look at this. And let's take a look at, let me just move my drawing tools around a little bit here. Okay, so when we look at this, there is still a significant amount of, let's go here on gold. Okay, so when we look at gold, what we're seeing is there's a significant amount of support, probably in the level of about, I would say down to right about 1272. So if you're looking at gold, that's something that you want to look at. One of the things you want to do is start loading up some of your stocks right now. So when we get to that point in the discussion, I will make sure to get there. Tesla came out with some interesting numbers that they are making their production numbers. Elon Musk, a memo was leaked yesterday from Tesla. And they said they're making their production numbers plus. Question is who's buying the cars. That's another discussion entirely, with also the potential for some of the credits on electric vehicles running out, and also with regard to the potential for some tariffs on the Teslas into China. There's some concern there. So let's take a look at this right now. We kind of bounced off a really long-term low. I mean, my chart goes back a year and a half. This is probably back to 2016. Right now, we're in a kind of, if you see the red on the right-hand side, the autopilot signaled a short right at about 231, currently at about trading at 198. We may get a new altimeter that's drawn here, and that would then signify that there is a profit zone that you want to take your money out of. So you'll see that. On a short-term basis, if you're trading it short, There was a trade that kind of initiated at about 198. You'd probably be out of it this morning right here. A couple other shorts, but you can see shorts have been dominating the screen. Macy's, another downtrend that's pretty significant on a daily basis. We look at this and we see that the aileron, which is our momentum indicator, available on the trading app store at TradeStation. So there's the Commander series combined with the aileron. The aileron is an add-on to the Commander series. Basically what you're seeing here is something really interesting, right? You're seeing that, well, we called a short at about 24.25 or so, and you got out of it at about 21, so it's good for about 8-9%. There's a potential short call that's coming in again on here as the big box retailers really get hammered. I'll mention, let's take a look at Nordstrom while we're at it. I mean, this is abysmal. Short was called here, very simple. You know, we use colors because I like it easy. I don't know about you, but I don't want to spend my time trying to figure out what this means and try to, you know, look at this and figure things out. So we color coded it because I like it easy. So we designed this to make it so that when we look at this, we can see what's going on very easily. We're just covering the charts today. There's a whole area of the radar screen for TradeStation as well that gives you a really good look at this as well. But basically what we're finding is that there is a significant downtrend. You got short about 41. You're out of it right about here. So I'll kind of look at that here and show you. You got out of it right here. You got into it right here. So, you know, a move from about 44 down to 37. Pretty significant and a nice move there for a short position. Then you got short again. You were in and out. You may have wanted to stay short if you had the desire to do so, depending on what the other time frames look like. But essentially, when we look at this right now, you're in no man's land. Take a look at this right here. You know, what do we have going on here? Well, what we have is, you know, there's no question here that we have this level of downtrend that is confirmed by the momentum. So, you know, looking at that, when we find that there is this significant amount of movement like that, I think what we find is that there is obviously the color coding helps I think significantly at least. Beyond Meats, a lot of people are interested in this. Now, Beyond Meats, we don't have a lot of information. We have to go back some time on a daily basis to get some good information there. But Beyond Meats, this is the fake hamburger company that serves a vegetable-style burger. And there's a few of these that are really popping up right now. You know, where are we with this? Well, in a short term, it's a very volatile, very choppy stock. You can see that on the right-hand side on the screen, very easily to find that there was these areas right about here that you would have gotten in. Gotten out. So that's the 75 to 90. A couple of movements that were short, in, out, a couple of false readings. You get those every once in a while. Shorting again here, getting out here, and then some questionable readings. You got to get above about the 80. I would say about, when I look at this, about 80, 83 or so. Let's clear all that. About 83 is the level that I would see. Right about 80, actually we'll call it 84, $84.14 is an area that you should be looking at to get long if it happens. And look at this, below 77, very clearly designed when you look left, and we just keep looking left. There's nothing under 77. They've been holding it really tight on that 77 to 78 level, and that's an area that you really want to pay attention to. So what else we got? We got Tesla, we did that. JD's interesting. Definitely been in a downtrend as these Chinese stocks have gotten hit dramatically over the last several weeks. And, you know, this one has been holding up pretty well, though. Look at this. I mean, we went from 2019, about 20 bucks up to about 30 for a 50% return. It held really nicely on this 26.42 level. I find that to be really interesting. There's not a lot underneath this, you know, because if you go below that 26.70 support, you're going to be heading down to probably about 25. But take a look at this and watch this as one of those plays that you want to keep a look at. SMH, these are the ETF that holds the chip companies. And obviously with the slowdown in smartphones, as well as the war with China, on top of that, the Qualcomm situation, and then add to that the idea that Huawei, the Chinese component manufacturer and smartphone manufacturer, is having a lot of problems. And what do you get? Well, you get this incredible downtrend that we're seeing right here. So when we look at this downtrend that's really developing here from 120 down to about 100, so about a 20% decline, where do we go? Do we see any particular levels on here that look of interest that we could find support? So, you know, what I like to do is I like to pull out a quick box tool of some sort. So I'm going to just kind of pick up where we are here and pick up my box tool and find where I would see that there's some support. So I guess we could see that support was in this area right about here. So I can confirm that. But the problem is that when you get below that, there's really nothing down to about 85. I would like to see the support holding right about the level, I would say about over the 100 level, which it is trading at today. And then I would say that maybe there is an opportunity to do a bounce trade and get in there. You know, you look at the levels on this that, let's see what we got here, right about 101. If you can hold the 101s, I would probably wait to get to about 101s before you do anything on this. We talked about crude, we talked about JW, and Lowe's came out with earnings today. This is just this week, I mean, horrible numbers. Compare that and contrast that, and let's make this chart, because we're looking at dailies right now. Let's compare and contrast this chart, which is your Lowe's chart. Look what happened recently in the last few weeks here as it came down so significantly. There really was, you know, nothing that looked bad about this until it got bad. You know, you saw this big bowl, this gigantic bowl that really stood out here. And then what happened from there is you obviously got to a peak, a double top. We marked that with this altimeter right here and the left altimeter right here. It was equal, pretty much the range that was pretty equal. So when we look at this, we can just, again, I'll use this tool today, right now. Draw this. Now, this was kind of that range that we looked at. But when you look at this right now, where are we? Is there any support? I would say that you have some support. I would say probably about the 91 area. Where are we now? Let's put a chart there. It's looking kind of wonky here. It could turn around and move higher for some reason. I don't know. But generally speaking, it doesn't look really exciting. The other one, though, you want to look at is Home Depot. Now, Home Depot also started coming down, and it's been holding, but this chart looks a lot better. So Home Depot is definitely performing better than the overall, than Lowe's, and I think this is a better play. Is there support? Probably around $189. Right now it's trading about $192 in the pre-market, so that's good. But you know, when you look at this, there was a bit of a reversal off of that questionable report that they put out where they weren't going to provide guidance, or at least they weren't going to provide the guidance with the trade numbers in it, with the potential for a 25% increase on some of the goods. So right now we're in questionable territory. Aileron is showing us momentum that's a little bit slow, not exactly exciting. Best Buy came out with earnings. Here's what we see on this. If anybody could take a look at this, everybody, I want you to take a look at this and help me out with this. From your perspective, what do you see on this chart? What is this chart telling you, if anything? You can write that over in the chat. Let's make this a two-way discussion. So this is a daily chart on Best Buy, right? We see that. And we have very tight altimeters here. But what do you think? Is this a long or a short opportunity right here? So Nick says fill the gap. Okay, that's interesting. Rolling over, definitely. Again, this is on a daily. We can look at different ones, but it's a daily. Who else? What else do you think out there? Daniel, Jerry, Ken, Rajesh, Steve. What do you think? Anybody? All right. Well, got a lot of listeners out there. Nobody wants to. Oh, there we go. All right. So let's talk about this. So let's take our tool here again and look at this area here. I want to just look at this area right here. So what I like to do is I like to connect areas looking left. Always look left, look left, look left. I teach everybody this all the time. It's really important when you look at charts, look left and look for connecting lines on the altimeter. Because what you want to find is where are those support levels? Where are the areas where traders are putting their volume and really putting the money into the market? So where are we here? Well, there was some support potentially. Actually, let me just move this up a little bit. Right about to that level. It's where it closed yesterday. Look at that. It closed right on that support level yesterday. You look left, and there was a little bit of a nub right here for some support. Definitely resistance right here before it, when it rolled over into the end of 2019. But if we take this and expand this out, it looks to me like down to about 60 is the level of real interest here from the short side. And you do see that there was some great support, really tight lines. So the distance between the top and the bottom line on support and resistance was really getting very tight. And usually what you find is the next move after a consolidation or a tight altimeter where there really is price agreement at those levels, the next move is significant, either direction. So when I look at this right now, take this off to look at, I mean, it looks like there is the potential for a move to the downside. So when you look at this, you know, I would say this is a short. You look over here, you know, kind of where we're going to go down to. You know, you have down to about the 60 level approximately where you could see that. So, you know, right now it's down again today in the pre-market when the market's up, but we'll see what happens in terms of how that works. What else we got? Deckers came out with earnings today. Right now trading up 7%, trading at about 157, which would be there. I think this is probably approaching an all-time high on Deckers. People like their shoes. Ross Stores down. They like some of their shoes, not all their shoes. They like some of the shoes. Ross Stores also trading a little bit lower on their earnings right now at about 93. You know, again, we draw these levels. So right now, about 93 is the support point. When you connect a bunch of lines looking to your left here. Below that, a little bit of support, nothing major, only one touch right here for this. But you do see the aileron is moving lower as well. Foot Locker came out with earnings today also. Right? What you have here is it's down to 45. It's off my chart. Down 13% and moving fast. You know, take this out a little bit here. Where is 45? Let's just simply draw a line at, where's it trading at? 45.66. So let's kind of draw a line right there. Do we see anything? And there we go. There's some support, but not a lot. You would see that the potential for, if we do drop below this November low, okay, right there, right? We drop below and we have some support. We probably got down to about the 44 and changed level on that. So Foot Locker not looking so good pre-market. And Hibbett Sports up 18%. This company is now trading at 23, so 23.55. So right on some resistance here, but you know, you get above that, you definitely have a run up to about 24 and change. Let's take a look at some of the stocks that you have here. Let me go through all of this. I'll mention that you do want to sign up for these webinars, and we'll talk about your stocks. Each week we'll talk about something different using some of our core tools, but we'll also have the opportunity to bring in a variety of other things. For example, looking at this particular chart on the left-hand side, what we have is a Mcclellan Oscillator. We have the 52-week highs and lows for the New York Stock Exchange. And we have on the right-hand side, we have the Spearman indicator. And what we're finding is we're at negative 146 right now on the Mcclellan, and we have a complex pattern under the zero line. So something there that's pretty interesting to look at. Yeah, Kevin's putting in the information in there. I'll also mention that anybody that signs up for a paid subscription, a new paid subscription for the TriggerCharts Commander Series is going to get a 4-hour training online video that you can access at your leisure anytime you want. So you can get that. There is a opportunity. Just email us at info@triggercharts.com. And once you sign up, a few people took us up on that offer last webinar. Get some training that you can follow along with. So it's $199 value. I really highly encourage you to do that because you get incredible amount of trading, and a light bulb will go off and you'll say, oh my gosh, I get why he's talking about volume and price. And look at this, the footprints of the traders in the market, the opportunity to find out where there are zones of fast zones and breakout opportunities. In addition, learning about do not short above, do not go long below, areas of interest, consolidations, and patterns that you'll recognize to really enhance your trading. So if you're using TradeStation, it's exclusively on the TradeStation Trading App Store platform. I really highly encourage you to do it. It's $149 a month. You get $199 of free training. And I think one trade, half a trade, can make that up. So take a look at that. But we are seeing that the markets are open right now, and the Mcclellan Oscillator is popping up a little bit. We still have a complex market below. It is Friday. We're going into a weekend. There was a lot of a drawdown yesterday. I expect some of that to resolve somewhat. But nonetheless, I think there is still a significant potential for some selling to go on. We'll see what happens here. If it's moving up, like I said, if it broke above, we're going to see that move. Look where it's going right now. Okay. And Foot Locker, as we talked about, it's lower than it was. So right now, Foot Locker is trading at 1478. Remember we said before, let me bring this up here and make this larger, because we said if there's going to be a break on Foot Locker below that level, we right there, 45, what was it, about 45? I'll tell you the exact number here. The exact number is 45.39, that the potential is to break down further. Right now, trading at 45.11. So there you go. I mean, it showed you very quickly where this is potentially going. Right now, the support of Foot Locker is probably down to about 43.25. That may not happen today, but that's where it is. So just keep that in mind. All right, let's get some of the stocks real quick. We got Qualcomm. Qualcomm's, the problem with Qualcomm is that you have this incredible ramp that moved up, almost took it all back. That was after the settlement with Apple. Problem is now there's an antitrust deal against them. That's a problem. So when you look at this and you look at the fact that there is this antitrust, you got to worry about that. $WJA. No, WJA. I have no idea what that is. WJA, what is that? I don't know what that is. But Qualcomm, going back to that for a second, there really isn't much that you could trade because it's all news right now. Let's go to Newmont Mining. This plays along with gold pretty well, obviously. If you do see a break above, I'll zero in on this a little bit. As gold kind of came in, this came in. Nice support here. I tried to buy this on the lows if I could. This is great support at the 30.25 level. That's where I'd really start to play it if I could. Above this level, you got a lot of resistance. Then there's also a lot. Look at all this muck in here. If I take this and look from right to left, I see all this potential price areas and a lot of altimeters that are drawn. On top of that, I could probably bring up the fact that on the radar, there's a lot of high volume nodes right here at 33 and change, also 32. I mean, you got to get above this 31, but the upside is obviously if gold moves along with this, but at the same time, the problem you have is that there is a lot of resistance on the top end right there. Somebody mentioned UNG. We'll do this as the last one, I think here. It's a really poor instrument to be trading. I can't, I don't see anything there. I don't know if you see anything there. I'll take off the radar so it's a little easier to see this right now. That's also part of this package. I just don't see anything with natural gas or UNG, to be sure. So let's take a look at our movers this morning. What's really making things, let's click over here. What do we got? Hibit's up, like I said, looking down this list. Jumai, interesting stock, Jumai. Decker's up 5.5% on the Intuit's also up 5%. Foot Locker is down to 45.07 now, so that's moving right where we thought it was, but nothing else significant. A lot of ETFs trading this morning. I think right now the Dow Jones Industrial Average up 164 points. We're seeing a significant move as we usually see on the open. So make sure to go over and get your free trial, if nothing else, all of our indicators, and we have many of them, from the Commander series to Aileron 360. We also have some freebies available over on the TradeStation Trading App Store. So there you go. You can get that, and of course, schedule yourself to register for next week's event as well. So I want to thank everybody for joining us, and make sure that you tell your friends, and we appreciate you being here today. To a great weekend. Have a great Memorial Day. Great Memorial Day. We'll be back next Friday with some really interesting things that we're looking at right now, some things that we developed to show you, and some other indicators next Friday as well. We're going to take a look at the KRI, the key reversal indicator, which is a pretty cool indicator. So make sure you're on for that. Thanks so much, and I will see you again next week.